I'm just going to connect with the management of JSPL. Ravi is ready now. Ravi, good morning, and thank you for joining us. First, just share the key highlights with us. How have things panned out for the quarter gone by? Operating profit margins are robust, but the PAT, that's the problem, is down by about 15%.
Well, I'm very pleased to, report that the company has done well both nationally and internationally. Our steel volume, and, if you look at the JSPL standalone, our steel volumes have gone up by 5%, whereas on a consolidated basis, the total steel business has increased by 11%. And on a consolidated basis, the sales have also grown by about 10%. What is really I'm happy about is the EBITDA levels, the way the performance has turned out to be very robust indeed. Our EBITDA level in this quarter has increased to 33%, both at standalone level as well as the consolidated level. And if you look at JSPL at standalone level, even the PBT and the PAT, both of them have increased by almost 16 and 25%. And if you look at the cash profit, the company's cash profit has gone up by nearly 40%. So all in all, I think the standalone JSPL performance has been quite robust. But when it comes to the consolidated performance, up to EBITDA level, the performance has been very encouraging, and the EBITDA levels are up by nearly 26%. And here again, the EBITDA level at consolidated level is about 33%. Compared to 28% that we had in the same quarter last year.
Right. Mr. Uppal, margin guidance for FY15, would you be able to maintain or better it?
I would say that we would like to maintain the EBITDA level at least around 35%. And we will continue to focus more and more on reducing the operating costs, and we will try to ramp up the volumes. Now that we have our Angul plant in place, and as the weeks and months go by, we are going to get more and more output out of Angul. And the second good news is that the modernization of our recored plant is completed, and its capacity has now been increased from 3 million tons to 3.6 million tons. And then, of course, we have the Oman plant, which is fully operational and doing very well. So I think we will continue to flog these three units more and more. And as far as power is concerned, we could run only one unit in the last quarter, as we got the consent to operate in the middle of the last quarter. But now that we have got the consent to operate for 2 units in the second quarter, we'll try to run both of them. And this basically means, in the second, third quarter, you could expect an additional 1200 megawatt to be added to the already 1000 megawatt we had from phase 1. And we are hoping to get coal linkage for unit 3 and unit 4 of Tamnar plant as per the budget announcement by the finance minister. So that should see through also unit 3 and 4 before the year goes out.
Talk us through about your recent iron ore and mine acquisition in Cameroon for about 100 crores.
Well, yes, we acquired the Cameroon mine with reserves of about 400 million tons, very high grade, the mine from an Australian company called Legend. So that we have acquired this mine and we have started the development of this mine. It's going to take us about 2 to 3 years to fully develop this mine and start the commercial production. So this mine is about very strategically placed. It's nearly about 100 kilometers from the nearest port, and so we will, mine the iron ore from this one, and among others, it will be used to meet the needs of iron ore for our Oman plant.
Take us through the progress seen on Utkal B1 coal block.
Well, as far as we are concerned, we have done everything that was required to be done for the Utkal B1 mine. And we are just waiting for the mining lease to be issued. So the matter is with the government, and and we are in constant touch with them. And I'm hoping that in the weeks to come we should get it, because we have made our investment in Angul plant on the promise of the federal and the state government that they will give us the mine to meet the coal requirements of our coal gasification plant.
So what is the current iron ore supply situation in Odisha after the government clampdown, and how much is JSPL's production from Odisha?
Well, that we basically source our iron ore requirement from two mines. Number one is our own mine Tensa, which supplies to nearly 25 to 30% of our requirement. And then we also have a long-term arrangement with another mine, SNPL. And SNPL, have a mining lease which is valid up to 2021, but their environment clearance had expired on 31st of March 2014. They have applied for extension of environment clearance. What I'm given to understand is that they have got the okay from the experts appraisal committee, which is also available, on the website. And now they're just waiting for the formal communication from the Ministry of Environment. And I have reason to believe that it should happen relatively soon.
Mr. Rahul, share with us your FY15 EBITDA target for Jindal Power.
Well, we are hoping that during the year 14-15 we should have at least 2 units, that is 2 into 600 megawatt run through the 3 quarters, that is second, third and fourth quarter. And the third unit for which, once we get the consent to operate, we'll get that also into the operation. And the fourth unit, depending as to when we complete and when we get the coal supply, will run the fourth unit as well.
Your debt burden has increased, interest outgo has doubled in Q1. What is the repayment plan, and what are the debt reduction plans or measures which you are planning to bring in place?
Well, as far as debt is concerned, we are extremely mindful, that we have to, keep the debt in check. And all our actions, are to ensure that the debt levels, if they don't reduce, at least we must maintain at the same level. But I'm quite optimistic that by the end of this year, we would have reduced our, debt in a good way. And we have, for a start, cut down for any further investments until we fully utilize the assets that we have built in the last 3 years. So you could see also already from the first quarter that our total investment JSPL alone is just about 700 crores as against 1300 crores that we spent in the first quarter last year. And this investment is also made basically to finish the tail end obligations of the investment that we have made. So we are taking a little pause as regards to the new investments. And secondly, all the cash profit that we are generating, a lot of it will be used to service the debts and to reduce the debt levels.
Fair enough. Any equity fundraising plans or debt reduction measures that are part of the course going forward?
Well, I never sort of close any options. It depends on need. As of now, we feel that we will have sufficient internal generation of cash whereby we can reduce our debt levels and also service the debts.